Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this busy Thursday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, and Dennis Dick. Earnings are going to be the story today. We've had Facebook, Microsoft, and Tesla all after the bell yesterday. That's leading the crew, but we also had PayPal, Comcast, Triple M, Hershey, Newmont, Bristol-Myers, ABBV, like 150 stocks reporting today. So a lot to get to on our show. That'll kind of be the theme of today's show, is just getting through the earnings reports. And then at 8:15, we'll be joined by our guest today, Anne-Marie Baiynd. She is a trader. She is an author, and she runs the tradingbook.com. Let's jump right in. Joel, what's the word here overnight?
We're trading up, not as much as one would think, with Microsoft up 6 sticks and Facebook trading up another 16. But we held yesterday's low at 28.50, 28 even, low yesterday, 27 even the low today. So there's a good level on the downside. On the upside, I have nothing at the pre-market high at 35.75, but I have a huge number at 39.75. That's a double top. That's the high of the move from Tuesday and Wednesday. That's what Dennis needs to get through to win his lunch. Crude trading up 26 cents at 66.15. Nice little range here. We still have the pair of highs at the 66.50 level to contend with. Gold in the red by $1.30, 1278.10. Support forming at the 1270 area. Silver in the red by 8.6 cents at 14.83. Triple D, a busy after hours in pre-market for you. How you doing?
These are always interesting days, just from an ETF arbitrage perspective, when you get a couple of stocks taking and adding up to more than the index move. And what we're seeing here this morning, if you just go and grab some of the top 5 components, let's just go do that for fun. Okay. So let's open up and look under the hood. We do this segment every once in a while. So you can look at the QQQ and see what the top components are. The top component is Apple. And Apple is trading up 0.27%, up in sympathy with a lot of the other tech stocks. Maybe not as much as you would think, but we'll get to that in a second. Microsoft obviously reported earnings. It's up substantially. It's 10% of the QQQ. It's up 4.7%. So just Microsoft, if you just do the quick math, is 0.47. So 0.4, it's almost half of the QQQ gain. Now, if you go to Facebook, trading up 9%, and it's 4.73% of the index, you can quickly see that, hey, Facebook is the other half of the QQQ gain. So almost between Microsoft and Facebook, it is the entire QQQ gain. Now, if you look at Amazon trading up, and you look at Google trading up 1%, and you start doing the math on this, you can look and say, well, there's going to have to be a few tech stocks that are down, because when we add in Facebook, Amazon, Microsoft, Apple, and Google, and they're all trading higher, they add up to more than the QQQ gain. So QQQ is not up enough for all of those stocks if you do the quick math. That means the other 95 components of the QQQ as a whole have to be down. So believe it or not, you're going to see a lot of stocks that are weak today to make up for it. So one of two things happen. QQQ has to go a lot higher. Facebook and those other stocks have to come in, or the non-tech components of the QQQ probably get sold off. And that's what we're seeing here this morning. If you look at stocks like Gilead, it's trading down in the pre-market. I'm short Gilead because I'm doing the ATF ARB. Look at stocks like Costco. It's trading down. Then now light volume, because these things don't have much of a market, but I would expect that they're going to be weaker here today just from the ETF arbitrage perspective. So there's a whole pile of stocks that are, smaller components. But even stocks like Cisco trading down 50 cents here in the pre-market, you might say, why? Because something has to go down. The math has to add up. So if they're not going to take the QQQ substantially higher, then they're going to hit other stocks that are in there. If you look, they're actually hitting, a lot of semis too. So that's going to help a little bit with NVIDIA getting hit here this morning. It's trading down $1. Intel is in the red here this morning slightly. So you're seeing a few, but overall, that's just how the ARB works. So you're going to see a lot of stocks get hit. And it's kind of messed up. And people who think, that the ETFs don't control the stocks, they do in this case. When stuff like this happens, the ETF arbitrage controls it all. So if you were to say, okay, KHC is going to be red today because Facebook is up too much, people would say I'm nuts. I'll tell you, that's what the ARB's saying, that those stocks need to go down to make up the difference. So, and I'm going to go on June 20th when I'm out in New York. I'm going to do a full presentation on this. But I make money from this stuff every single day. We know I do a lot of different ETF arbitrage, and this is how I make my living. So I know this stuff. It's not a matter of, is this an opinion? It's a fact. I'm telling you, you won't read books on any of this stuff, but this is how it's done. Certain stocks in the index have to go down. The math has to add up to 1. It's grade 1 math. All the components have to add up. And we get 2 making up the bulk of the gain and another 3 making up more than the gain. That means the other 95 have to go down. Messed up.
Does it all come out on the wash on the open pretty much, Dennis? Does that?
Yeah, but you'll see a minute or 2 after the open. Okay. Sometimes stocks open too high, too low, and that's why you see the violent moves often too. As the arbitrage from the ETFs, you'll see stock opens too low. They got to bring it all in. But 5 minutes after the open, it's all equal. So it's all going to add up because you've got all the high frequency machines online. Everything is just adding up. But after hours, you got to think there's 75 stocks probably in the QQQ, don't have much of a market at all. So it's a little bit of a guessing game. If you're playing this after hours, you're kind of guessing a little bit. Okay, I'm guessing they're going to hit this stock. I'm guessing they're going to hit this stock. But you don't know the actual details of those 95. But my first guess as a trader would be, well, they're probably going to hit the non-tech ones first. Why not? Because they're not pure sympathy plays. So that's why I think, I'm short a stock like Monster Beverage. And it's trading down 2% in the pre-market. There's probably no headlines. I didn't bother looking, but I'm just assuming that it's probably going to be down because it's a non-tech component of the QQQ. There's about 20 stocks in there, which I've talked about before on the show, that are not tech. The tech stocks, a lot of them want to trade up in sympathy. But even like I was saying, Cisco is a tech stock. For some reason, it will trade opposite sometimes when stocks get up too much. And these are only in cases when you have 1 or 2 stocks taking up the bulk of the gain in the index. We do see it. We'll see it in the diamonds today, too, to a certain extent, because 3M is going to be so much of the loss of the DIA. You'll probably have to see a few stocks make up for it. But I'm just trying to give you guys a little bit more perspective on, how everything works on the inside. This is what your high frequency trading machines are going to be doing. I'm doing it, more of a guessing game after hours manually to a certain extent with a little help from some automation. But, at 9:35, it'll all be adding up to 1 perfectly. But when you're pre-market after hours and you don't have a market in like 50, 60 stocks, it's a guessing game to where these things open. So, and sometimes they open too high or too low on the open, and that can give you an opportunity too. But, after you go 2-3 minutes after the open, it will all add up. So, and it will add up in the case. So, and if Facebook and Apple and Microsoft come in, it can correct itself that way too. And then those other stocks can go down. But what the media will often say is this is like natural rotation. Oh, they're going from, they're just moving in from, tech to non-tech. But if you just go into it, the ETF arbitrage is behind that rotation a lot of times. So we're trying to show you, get down to the details. This is what happens. But it's just basic grade 1 math.
All right, we have about 5 minutes before we're going to grab Anne Marie.
That's great, Dennis.
No,
Dennis, you know what? That is the things that, we're all following you, and it's incredible that you could do it. It's just that
it's just basic math.
Yeah, but you don't have a spreadsheet.
Everybody follow that. The 100 components have to equal the Qs. And when you're after hours and you have 80 of them that really aren't trading, or 70 that aren't really trading, it's a little bit of a guessing game to where they're all going to go. But it's not surprising that some of these stocks are weaker here this morning for the simple reason that they're non-tech components of the QQQ. All
right, we got it. We are going to move on here. I guess let's start with after hours, Spencer. Tesla?
Yeah, we can do Tesla, sure. This was a wild one. So they typically report at like 4:15, 4:30, that range. Yesterday, the report didn't come out until like 5:15. So everyone who was waiting for the conference call to start at 5:30 had like 15 minutes to read this thing before the conference call started if you want to listen to it. The report wasn't great. They basically missed on both
Was
numbers.
It great? I mean,
wasn't great.
Who are you, Gene Munster?
Adjusted EPS, $2.90 loss versus 60-cent loss estimate. Sales of 4.5 versus $5.4 billion. So again, a miss on the EPS and sales for the quarter. The one thing that they said that I guess was okay was they reaffirmed their prior delivery guidance for the year. So I guess that's good, but they lost a lot of money, and the consensus is just nothing in this report was really was good. Most of it was bad.
It was all bad.
It was all right. It was all bad.
Let's put this in perspective. If you, and I'm trying to talk slower today, just to follow me, because everybody says I talk too fast. You know, they can't follow me, so I'm trying to talk slower here. So if you had this quarter on any other company, the stock would be down 20% today. This stock is just so hated, and it's such a crowded trade to the short side that it just seemingly can't go down. And it's you know, I look at this and I cannot believe I'm long this thing, because I look at this report and I was like, what the hell am I doing being long this company? You know, they're doing so many things wrong. Even like you were saying, Spencer, when they were trying to get the release out there, they messed that up too.
Okay, so
talk about that.
So
like what was the details behind why it was late to report?
No, I'm not sure whether or not this is true, but I see no reason why the editor-in-chief of Electric would joke about this. But he did tweet at 4:41 Eastern yesterday that Tesla forgot to get their old CFO's password when he left. So they were locked out and they couldn't release the report. And that was about 40 minutes. That was at 4:41 yesterday. I don't know if that's true. I see no reason why he would joke about that. If he is joking, that's not a funny joke. But either they
can't even release the earnings right.
Either they waited so long because it was terrible, or they got
the
locked
company
out.
is run. It's being, you know, it's like a tire fire the way they're running. You know, the business side of this. They need help. But the technology, I still believe in the technology. I still believe it's fantastic. But holy cow, do they have a lot of issues? They can't even get the earnings out. Like, we need some people in here who know how to run a business. But that being said, the stock's down $1. How is it only down $1 on this? I'm completely talking as my book because I said I'm long it still. But how is it only down $1? I mean, if it cannot go down on this report, if you're short, imagine being short this stock, or imagine holding a pile of puts and you see those numbers released and you're like, come to Papa, this thing's going to fall 10% here right now. And you actually see it rally on like it hit a little bit and then it went up to like 265. You must be scratching your head. Like, what is it going to take for the stock to go down? What I'm asking in the chat, what is it going to take for this stock to go down? Maybe it's going to start rolling over and people are just going to all of a sudden, you know, open up their eyes. But I don't know what it's going to take for it to go down if it can't go down on this.
How about a car catching fire in a Shanghai garage?
Yeah, that didn't work.
I
mean, yeah, okay, it's leaked some from there, but the amount of bad headlines that this stock has had in the last month, and to only be down 20 points or whatever it is in the last, you know, or even if you look at where it was a month ago, it's where it is a month ago. It's incredible. The resilience of the stock is incredible. If they ever start coming out with any good news, the stock could really fly. But I don't know if the good news is coming. I mean, from a fundamental perspective, I have no business owning this whatsoever. I don't sell it because I don't know why it won't go down. So if it won't go down, then why am I going to sell it?
I think
messed up.
I think you like to keep it just to like keep you up at night. You know,
I like to keep it. It's not even making me nervous. I just like the fact that every single person on my Twitter stream hates it. I almost want to own it just because of that. It's hated so much. I think this everybody's positioned. And what's a short interest, Spencer?
We were talking about that.
Yeah, 20. I saw 25 or 29%. That may not be entirely up to date. The last FINRA short interest reporting date was April 17th. So that was last week. And they were only required to report every 2 weeks. But 25%, regardless, if it's in the 20s, if it's above 10%, it's high.
Huge.
It's high.
And that's and we talked about this on the pre-market show too. It's also not accounting for the puts, right, in there. So if you have the puts, you're natural. You know, if you see these hours moving at pre-market after hours, and you want to lock in some profit, I'm sure the premiums were just crazy. And I bet you the straddle riders are just getting blown away today as well. But let's just look. I'll give you the pre-market low. We got to get to our guests. The pre-market low, 250.52. Your pre-market high was in the 265 handle, as Dennis mentioned. It was 266 even, actually. And we're just hanging unchanged here. So I'll just use the closing price as my bogey today, and that closing price was 58.66. I'm sure we'll be up, down, and all around on that number. But
will be some volatility.
There will be volatility.
Maybe not enough for the straddle raiders to make money, though.
Nope.
All right,
Or straddle buyers. Sorry.
Let's take a quick break and grab today's guest, Anne-Marie Baiynd, as I mentioned, trader, author, thetradingbook.com. We'll be right back with Anne-Marie. All right, welcome back, everyone. As promised, we are live with Anne-Marie Baiynd, trader, technician, author, and the founder of thetradingbook.com. Anne-Marie, how's it going this morning?
It is going very well. I'm interested in watching the divergence between the Dow futures and the ES to see if the Dow is leading the way or if it's just weak because of Boeing and a couple of its participants. I think that's very interesting. Yeah. It is all 3M.
It's fun, Anne-Marie. Sometimes we do a segment I call it Look Under the Hood. And if we just go and check out, the DIA and you look at 3M, 3M is 5% of the DIA. So if we just go and look at 5%, you can take, 8%. So you can quick do the math on that and say, what is that quickly? 0.24% of the DIA gain loss. So over half, I'm doing the math. Am I doing that right in my head? 5.5. 0.13. I'm trying to just do it quickly in my head. About 0.3. So in the DIA, so it should be down about 0.3% for just 3M. It's down 0.47. So over 2/3 of the DIA loss is just 3M. And then if you look, there's obviously other stocks in there as well. But the bulk of it, and UNH is trading down here too, which isn't helping, and it's 5.8% of it too. But the bulk of the DIA loss is indeed 3M, down $17.
I see that. They must have had some kind of warning. I did not. Or what's the storyboard there?
Yeah, 3M missed on earnings and cut their guidance, so that's a recipe for disaster.
Oh, I see. Okay.
Yeah, it's actually almost 0.4% of it. So it's the bulk of. You could say it's the bulk of the losses. If 3M didn't exist, the DIA would just be slightly in the red, almost in line with where the rest of the SPY and everything is.
All right, Anne-Marie. Well, first of all, I would just want to notify everyone. Anne-Marie is under the weather today, but she was kind enough still to come on our show because she knows it's the best market show out there, and she likes to come on.
That's right.
So thank you, Anne-Marie. Just real quickly, and you follow stock like Tesla, and we'll just go back to it real quick. I mean, you couldn't have had any worse news on that quarter, and it's down a couple bucks. I mean, we're just talking about the short interest in it. I mean, trading it from a technical perspective, you are coming down to the bottom of a trading range here. But just, get away from your technical. What about just a fundamental look at the stock Tesla, and why is it not under 200 bucks?
That is a really great question, and I believe the answer is as simple as it's a cult stock.
Okay.
Right?
Yep.
You either love it or you hate it. You love Elon or you think he's bananas. You might love him because he's bananas. I don't know. But I do believe that it's really a cult. You either love it or you hate it. And it really has not got any numbers to hold this. And at some point, the rubber's going to meet the road, but when that is,
not necessarily.
We were just talking. What's it going to take for the rubber to meet the road? Though I mean, this quarter was nothing short of a disaster. They missed on everything. They couldn't even get the numbers out right because they were all disorganized that way too. And here you look. If you're short the stock and you think, oh, this has got to be the moneymaker for me now. This is going to be the time. And you look at it, and it's trading down $1. Any other stock that reports this quarter is down 20% today. And this stock is just so resilient. Why the resilience?
I think very interestingly, there is this line in the sand mentally for these traders. And a lot of times when I listen to news and it doesn't jive with what how about that word, jive? Wow. And it doesn't hold with the numbers right there that we're seeing on the chart technically, then we have to step back and go, wait a second, there's a floor here that people are really holding. And when that floor breaks, then we're going to see the trouble. And that number to me is 250. And it's holding that edge and holding it and holding it and holding it. And as soon as it breaks it and fails to recapture, we're going to start seeing people look for these lower edges, because it really should be around $200 at this juncture. But right now, even technically, it's holding strength that says, hey, people are going to be buying the dips here.
All right, Anne-Marie, let's move on to the overall market. And we're never going to forget when we had you on when the market was melting on in December, and you just were calm, cool, collected, and you just said, hey, a period of selling the rips, and obviously that's come to pass here. But now I guess we're at the exact opposite end of the spectrum here, where, you have a quiet market. It's just creeping higher. Ranges are contracting. I mean, so far earnings are pretty darn good here. I mean, how do you adjust your trading style, and what are you looking for? I mean, for me, I'm keen on the double top from Tuesday and Wednesday, but how do you shift gears, and what's your next turning point in the market?
Shifting gears is always a tough thing. And for me, I really expected this market to give quite a bit of trouble at around the 29.12 area, which was when, we were together in October, and I had talked about, hey, that's a real breakdown area, and I expected it to fail. And so mentally, I did have to look at that shift. So the question is, one, can we perceive why it is, what the strings are that have created the shift? And then how do we look for this shift to either continue to the long side or give us a period of wide angle sideways motion that could eventually fade? Now, my suspicion is that we are still going to back off of these levels. So I am cautiously bullish. Now, cautiously bullish means that I miss out on tons of magnificent trades to the upside, but I'm so busy weighing the potential risk that I've got to prepare myself so that I can sleep well, right? And not sit in spaces where I get up and go, holy cow, what just happened there? And we just had a new injection of market levity come in with China, and that actually really has allowed the market to shove up significantly higher, well up over these edges, but still not at the top. So I still think we're coming into that topping formation that you mentioned, Joel. I really, really do. I'm very cautiously long. I'm looking for pullbacks to engage, and the second things get persnickety, then I'm out of there. For me today, working with the ES, I do not like longs unless I'm up and over 29.35.75 and it holds. Then I can look at everything. And then, of course, the market sort of runs in tandem. If you're looking for your favorite stock trading intraday and you can see that we're holding over 29.35.75, then you go, all right, I'm going to buy it here. Shorts are going to have a tough time if we get up over that level. There's too much sort of propping up the market, too many people thinking to themselves, I'm not going to miss out on this next move. I missed out on the first one. And so there are tremendous amount of cross currents. And that is the big thing. What's under the covers? What's under the covers isn't saying we're going to do wonderfully and move all the way up. What's under the covers says this grinding motion that you're talking about. And when we manage risk, you've got to look at that grinding motion and say, all right, if it pulls back, where should it hold? And that really is what I am looking for, and just trying to trade in that bullish direction as long as I'm sitting up above the major trend line that I can draw on a daily chart. So I've really had to reassess my head, because I actually thought we would grind through the next 2 quarters. But what happens is when governments and money starts pulling strings and saying, no, we've got to levitate this and keep it steady, then we really have to pay attention and just follow along. And so I've had to do a lot more fundamental study to keep up with what these markets are trying to do.
All right.
Anne-Marie, just a question on these overall markets here. I mean, the S&Ps got very close to a new all-time high here just in the last couple of days. And the last now we appear, and I don't know if we're stalling, but we're hesitating, I will say. Thoughts here that this old high, and this is just not just a high just from the summer. If we go back further, there's even more levels here we can look at here. Just looking back to the beginning of the year, we didn't quite get there, but I mean, I don't know, call it a triple top, or definitely a potential for a double top here, though. What are your thoughts technically here on fighting last summer's resistance?
I like shorting these edges up here, and that could be a psychological problem.
We all got those.
I do too. Me and Joel look at these big levels. We're like, yeah, let's
and we just walk around going, oh, this level. Like I couldn't, like this morning, I look up, I'm like, why are the S&Ps not higher? Why aren't the S&Ps higher? They got to be higher. They got to be higher,
Yeah.
But anyways, I'm sorry to interrupt you, Anne-Marie. Go ahead.
No, absolutely. And so what I would be inclined to do is watch it get up there and then use a big candlestick, like a 4-hour candlestick that says, oh, all right, well, it's not getting up over 29.40. So maybe I'll try a little short there, and I'll just have my stop 2-3 points wide, and I'll have a small size, so I don't get my face ripped off if it happens to move in the other direction. But I'm always willing to do that, because past resistance predicts future resistance very well. It just doesn't tell us if it'll hold for a long period of time or a short period of time, but it does tell us that we are going to have sellers there.
Real quickly here, I talk a lot about how consolidation periods are just as important as not more important than breakouts, highs and lows and stuff. But I'm just scratching my head here over XLF here, the financials and Bank America in particular. I mean, these stocks just bunching up tight ranges. I mean, we got the real bad, supposedly bad news of the super dovish Fed. They crushed the financials, and then they have good earnings. They come roaring back here, and I'm thinking for the next, for us to get to 3,000 here in the S&Ps, I'm figuring the financials got to pick up here. What should I use for a technical trade? I mean, I have my own levels, that I'm looking at here. But man, are we just going to sit here and in the XLF at 27.50 or Bank America at 30.10? It's not going to stay here forever. Give us your take on the financials.
Well, I think that the fact that they are not near their all-time highs when the market is a little bit of a red flag.
Okay.
Because there's so much of them in the broad market. So I would be, if you want to talk about a canary in a coal mine, the XLF does give me a bit of pause because it's not running at the speed or strength that the other charts are doing at this time. That being said, I just saw somebody draw an inverted head and shoulders pattern on the daily chart, and I thought, oh, that's great. But for me, I'm always going to look to the edge of the prior resistance areas on a daily. Like right now, we've got this. If I look on a daily chart way back in, say, October, when things, hit the fan, I would look at this number and go, all right, we've got 2754. We could get to 2770. We're going to see sellers there. It's how much they push it back that tells us whether we've got traction to the upside. So I would allow it to break out, let it pull back. Yes, you might not get the bottom there from it moving, but what you're going to have is a more stable structure that can move forward. My thought here is still, listen, if it punches way high up, I'm looking for a short. And I'm looking for a short because we've got a technical drift event, because we've got motion that is grinding, and because the undercurrent of the market is still a sense of slowdown and a sense of paring back. That's really everybody, all the monetary powers that be are trying to pull the strings so that it doesn't pull back. And that is a very thin line that is likely to break. So I'm going to push against that until I have a trade that says, wow, I got stopped out and it moved higher up into 28. So now I'm going to look for the pullback into 2750 where I had all this resistance, and I'm going to look for that to give me a trade to the upside. I just try to make it as simple for myself in terms of understanding old resistance becomes new support in the grind upward. It's the only way I can build my stair steps to understand what kind of risk parameters I have.
All right. Anne-Marie Baiynd is a technical-based trader. Her site is thetradingbook.com. Anne-Marie, as always, thank you for the time and feel better and have a good rest of the week.
Always.
Thank you,
Thank
Anne-Marie.
you so much. Always my pleasure. Always my pleasure. Good luck today, fellas.
We'll send you some matzo ball soup to make you feel better.
Thanks, guys. I'll see you later.
Okay. Anne-Marie Baiynd joining us here on Benzinga's Pre-Market Prep. We had some durable good orders here. Haven't moved the markets a whole lot. We have imbalances here. We're still really tight range here, Dennis. Anything notable imbalances?
No, you know what? They're really, because people are very confused by this day. I mean, you come in and, if you were just to say Facebook and Microsoft are going to be up as much as they are, you would think that the S&Ps would be up substantially, and they're not. So obviously there's some stocks bringing it down. We know some of the other stocks. So you're going to see a lot of rotation. This is going to be rotation station here today. With 3M down $17, you are seeing some stocks heavily red, some stocks heavily green. Obviously, some of the stocks that are going to be related to Facebook. We think of FANG. It's going to be strong, relatively speaking. And then you look at other stocks, and there's got to be some weakness because the SPY is not up enough. I'm already seeing, some weakness in the financials, despite TLT being down, which typically when TLT is down, the banks will be up, but they're showing a little bit of weakness because you know what? They got to sell something. So it's going to be a weird day with a lot of rotation. You're going to be shocked to see a lot of stocks trading lower here today, despite getting obviously very good numbers from Facebook and Microsoft, which we haven't even talked about those individual reports yet. We talked about the ramifications from it on the rest of the market, but we didn't talk about Facebook. And full disclosure, I'm still long my Facebook.
All right. Facebook reporting yesterday after the bell, the Q1 EPS, which includes a $3 billion charge, $1.89 versus $1.63 estimated sales of 15.07 versus $14.97 billion. So the sales is the number that probably matters here more, just because the earnings did have that one-time legal fee. $3 billion. So the sales beat. Their daily active users and monthly active users are both in line with estimates. And that's it.
You got an initial dip right on the number.
Yeah.
You had it for about same story as Twitter. This is just a repeat of Twitter, really. Maybe not to, almost identical, really, when you think about it, because we had that little dip right on the initial numbers, and Twitter did the same thing right on the initial numbers, and they came in a minute later and just started buying, and they didn't stop.
I really thought because you talked about it yesterday and you said you're not selling your long position. You said even if it dips, I think it's going to rally back.
Yeah, I know. And it did dip, and I probably should have been out there. I looked at it at 179, I think it was, and I was like, man, I should buy this. I didn't though. I hesitated. You snooze, you lose. The thing was 183, 185, 187, 190. 10 minutes later, just kept exploding. Got over $200. I mean, at a certain point in time, it's getting overdone. If you're coming here and buying Facebook now, and I know there's a lot of ratings that are coming out here this morning and saying, oh yes, let's go and buy Facebook here. These guys are so late to the party. Upgraded by UBS. Late to the party. Who else? We got a lot of price target raises here. I see this morning. Yeah, Spencer, give us a rundown on the analysts that are chasing price this morning.
Wedbush raising to 220, KeyBank raising to 220, Canaccord raising to 225. UBS is an upgrade to buy. That's all I see.
Yeah, go ahead.
You know what? I might actually, this could be the upside capitulation day. I mean, we're $130 when we started the year. Now we're 198. I don't know if there's any reason. I don't think it's going to be one that just gives it all back here, especially, Twitter held on to it well. But you start getting up over $200. You start getting that old resistance area where everybody had the pain from before. I mean, it's getting to a point where it's starting to get overdone, and it's starting to get to a point where maybe it is time to ring the register on this. So I may ring the register today. I haven't decided fully. Like I said, I already had sold a bulk of the position before the earnings. So, or actually way too early, before it even, a month ago when the thing was like 170. So I don't know. Joel, what's
tough? I'm glad you held it to earnings. That dip. Well, first, just a real quick question on your executions and stuff. Like, if you would have put that order in at like 179 when it was going straight down, I mean, you might have got done at like 177 or 178 because that thing just went down so quickly and then rebounded. Do you ever get huge price improvements when you're
You don't get much price improvement anymore because the sweeps are all there. The only time you'll get price improvement, obviously on the open, obviously on the close. But when your order is sitting out there, it just sweeps through it and kind of gets you. So you're rare to see price improvement. If there was a trade through on another exchange and then that offer might have, there's outside chances of price improvement. And in a fast market, that is where you're going to get it if you do have some trade throughs happening. But for the most part, in trade through, I'm not going to sit in here and explain. Take me 10 minutes.
Okay.
So, but it's just basically when one exchange trades through the other exchange because it's trading too quickly. For the most part, price improvement days were gone when we started moving all to sweeps. So, back in the day when we were a manual system, you get price improvement on your stuff all the time. When 90% of your order flow on the NYSE was running through the specialists, you put bulk prints together all the time. Doesn't happen very much anymore. So you get price improvement on the open, price improvement on the close because you got the bulk print going in and you'll participate along with that print. But for the most part, after hours and stuff, you're not going to see price improvement.
All right. You dipped down to 175.47 and you did have some daily lows at 175.55, but you'd be one hell of a technician to be able to pull up the daily, see that level and put an order out there. We have snuck over $200 pre-market high, 202.25. We are gapping into a gap area, which is probably where I am least effective in my technical analysis. So I will just tell you 214.27 fills the bottom of the gap from July. Don't think we're going to see that today. There's got to be some willing sellers at 200. Currently 198.20. So I'd use that pre-market high if you're looking for follow through.
Microsoft, let's go there. Q3 EPS $1.14 versus $1. Estimate sales 30.6 versus $29.84 billion. So a beat on the top and bottom line for MSFT. Their cloud growth was strong. That's their most important segment for Wall Street, and that equates to a great report.
Stock completely ignoring my Skype problems.
Yeah, I have a new trade.
Obviously, that's such a small piece of their business. I know it was a joke yesterday, but in any regard here, the stock continues to outperform. $131. I mean, the stock is so resilient. Is this, though, the most valuable company in the world? Over $1 trillion. Is it?
It overtook Apple a while ago.
But Apple came back so much.
Yeah,
so I thought Apple then retook who's worth more, Apple or because Apple's back so much. Who's worth more, Apple or Microsoft? Anybody know off their top of their heads?
I'm pretty sure it's Microsoft. I think Microsoft.
I think Apple's back over $1 trillion too, though.
Okay.
No, I don't think Apple is.
Apple's not a trillion?
No, I don't think so. No.
You know what's killing them too is all their buybacks. As they buy back,
Right. It's a moving target. Exactly.
It's a moving target because of all the buybacks. So it's funny, the buyback's obviously good for shareholders, but it actually brings down their market cap because they're buying back shares and retiring them. So it is a moving target. It's a good point.
I have a new trading system, which I'm going to reveal to the crowd here. Every time you complain about Skype, I'm going to buy 100 shares of Microsoft.
I know you should. The Skype. We should find out what Skype is of the revenue. It's probably zero. It's negative, probably. I don't know how they make money on that Skype.
As we wondering why the S&Ps weren't up more, they are rallying now, up 4 points here at 29.3575, making a run here. Pre-market high 35.75. Of course, I've talked about the big double top up top at 39.75. Trading at the highs of the pre-market session, 131.85 is where you're trading. Or that's your high. You're trading 131.65. Just massive value. Oh no, not massive. 628,000 here. So I'll be keen on that 929 and 29 second high. Right where that is, and use that as a target. And back in the chat, we haven't seen Mosca in a long time. Mosca, where have you been? And yes, we still use Skype, but we're migrating from it. Welcome back, Mosca.
All right, let's go to, since we've
165 stocks.
Yeah, let's go.
Let's go. We're not going to talk.
All right, well, let's go to 3M because we did talk about it earlier. 3M dragging us down this morning. Adjusted EPS $2.23 versus a $2.49 estimate, so a miss there. Sales also missed 7.86 versus $8.04 billion, and they cut their fiscal year EPS guidance from $10.45 on the low end to $9.25. So they cut it by over $1 there. So a miss, and a guidance cut for Triple M.
The bulk of your DIA losses today. Stocks trying to find support back where it found support in March at 198. What's the pre-market low?
We're right near the pre-market low. A couple times we have hit 197, 197.02, 197, 197.
Call that 198 major support. Then.
Yeah.
We're off it now at 201.
Yeah. And I will just, the high here off your 197 low has been 202.96. So let's call 197 to 203 your range. But I'm going to give the same setup here that I wish I would have listened to myself on yesterday in iRobot. Remember when it was holding 110? 110, it was just holding up there. There was a buyer for whatever reason. Man, that thing took out 110, and as you would say, Dennis, kaplooey. So this is a little bit thicker of a stock, a little more heavily owned. So I wouldn't, use as much of a breakdown on it, but I'd be using that pre-market low as a good potential place to cover a short. And on the dailies, Dennis nailed it with that 198 low, 198.50 low. So I give it a little bit of a range. Pretty good support there. I think that has a better chance of holding up than like that iRobot. But that's a thinner stock that just had a huge run. This is a thick stock.
If you have any earnings you want us to hit, please let us know. Let's do PayPal right now. They reported yesterday. Q1 adjusted EPS 78 cents versus a 68 cent estimate. Sales 4.12 versus $4.13 billion. So EPS beat and a slight miss for PayPal in the first quarter. Their Q2 EPS guidance was in line, and their sales guidance was also in line, or a little bit light actually.
$110. We're up at the all-time highs. Let's just say that's going to be the stock is been an unbelievable stock. One of the worst sales I ever did. I had this from the eBay spinoff and held it for a lot of years, and I didn't hold it long enough because in the last 2 years, it went from 40 to 110. So anyways, I've had it a couple times on the way up, but I've left so much money on the table on this one. This just goes to show you that you can actually, they always say, you can't go wrong taking a profit. I'll tell you, I went very wrong taking my PayPal profits over 60 points ago.
Boom, pre-market high. They scooted this to 109.80, but I'm just going to keep an eye on 109 here early in the session. Your all-time high was at 109, and then that was flanked by three other highs at that area. We're still under it. It's still a potential breakout over there, but we'll just have to see if those sellers in mid-April at 109 are still there. But nice pop. This one also had a dip off the number. I'm not sure what folks were looking at. 103.85 is your pre-market low, but keeping an eye busting above 109 in PayPal.
I want to note what someone just said in the YouTube chat, that Canaccord maintained their buy on Tesla this morning, and they raised their price target to $394.
So they're going against the street here.
What in that report it says you should raise your price target? I don't. Anyway,
I'm saying it can't go down on this; it'll never go down.
I guess.
That's what I'm saying. It's down $3. It's trying to leak. Everything from a fundamental perspective, the stock should be down a lot more. But we know this market doesn't always do what it should. And it'll be interesting. This is a big day for Tesla, because if this thing can close green on this day, that is absolutely incredible. And I think you'll see some shorts thrown in the towel if that happens. If they overcomes and you get fundamental players just saying, look, this story is just broken, I need to get out, then that changes the story. So, but like Anne-Marie said, it's a cult stock. And the people who own this thing just don't like selling it. They're just believers in the long term. This is going to be the future. It's going to be all of the autonomous driving, the infrastructure that they're putting in place. Obviously they've done a lot of, money in infrastructure as well. And maybe eventually they do start turning a profit. They teased us last year when they started showing a profit in that one quarter, but obviously burning cash here once again, and that becomes an issue. ServiceNow, NOW, up 17 points. The cloud stocks are going to be hot here too. Give us the numbers for NOW.
Q1 adjusted EPS 67 cents versus a 54-cent estimate. Sales of $811 versus $766 million. So beat on both the EPS and sales in the first quarter. They also gave some fiscal year adjusted billing guidance, which was strong. Subscription sales guidance also good. So good across the board.
New all-time highs. It's always difficult if you're short stocks. They're making new all-time highs. That's just, I've lost a lot of money trying to short stocks making new all-time highs. There's no resistance, obviously wide open here. The stock has been consolidating for a month and a half too in the 240 to 250 area. Now you break out of that consolidation, makes me think I'm a buyer of pullbacks in ServiceNow.
Wow. We got it up to 263.75. Backed off to 252 and change after that. So there's some wide numbers for you. Currently trading at 260. This blows away the all-time high, 251.65. So if we really go into reverse, that could be support. But I just use that 263.75 as a target. Longer it takes to get up there, maybe you might have to sell it on a little bit of a decline. But right now, new all-time high for ServiceNow.
Yeah, and if you think all the other cloud stocks are going to be higher here too, and that puts upward pressures on the Qs as well. There's a few cloud stocks in there. Salesforce.com, CRM trading up on these numbers. So you can think like the Splunkster, SPLK, it's trading up on these numbers. So, and all your cloud stocks there. I mean, you can even go into the Adobes, some of the older cloud stocks that are out there now too. Those are all going to be higher on this service.
Can I just a great comment here from Omar in the Google chat, and welcome Omar. I don't know if you've been to the show before, but he says Tesla is the new Amazon from 2012 to 2014. Remember that? Remember when
we all hated on Amazon a lot, and the valuation didn't make sense.
Yep.
But the one thing was that Amazon was growing.
Yeah.
But it was growing, and we knew, like, we had Michael Pachter on the show, a few years ago, and saying it too. I mean, Amazon could always make a lot more money if they wanted to, but they were just sinking it back into growth. They just kept sinking it, back into the company for growth. They didn't care about the bottom line. They only cared about the top line. And I mean, I guess, Tesla's still growing the top line. At a certain point in time, keep burning cash the way they are, though, that becomes an issue.
I think that was Gene, wasn't it? Was it Gene or was it Michael Pachter?
Well, both of them have been Amazon bulls for a long time, so they're probably both given similar arguments. But I mean, Pachter, Pachter's been a bull on Amazon for a long time too, has he not?
Yeah, no, he has. All right, keep us on track.
Xilinx down 10% here this morning.
New all-time high yesterday.
XLNX Q4 adjusted EPS 94 cents, beat by a penny. Sales $828 million versus $824 estimates, so a beat there as well. Q1 sales guidance was strong. The estimate was $832 million. The range they gave was $835 to $865. So a beat, and a beat across the board, and
it's getting beat.
Yeah, getting the beats.
I mean, this is putting pressure on a lot of your other semiconductor stocks here too, but we also have LRCX going the other way. So they're kind of like they can't figure out which way they want to go because you got Lam Research trading up 5% here. You got Xilinx trading down 10%. And then you have, we know Applied Materials is a lot more linked with LRCX. It's trading up. But if you look at Marvel, MRVL is trading in the red here. We know NVIDIA has been trading in the red all morning. So that's a little bit of the reasoning behind it there. Even Intel and AMD. AMD is actually turned to the green, but Intel's still in the red here too. And then Micron sitting here just slightly in the green. So you got a lot of push-pull here going on in the chips here this morning.
Yeah, this one, new all-time high yesterday. Street leaning the absolute wrong way into this report. Initial dip took it down to 121.63. You managed to rebound here to 128.55, and there was a couple highs up in that area. So I would keep an eye on that as resistance. I think this one more like a iRobot candidate here, where you take out that pre-market low at 121.63. I think the floodgates could open just because the stock ended the year at 85.17, and you're still 35. Boy, more than that. 40 points above that low. So still a lot of people, even though it's down, $14, a lot of people still sitting a lot of profits. So keep that in mind if you're trying to buy this on a scalp.
Let's do ABBV. Q1 adjusted EPS $2.14 versus a $2.05 estimate. So beat there. Sales 7.8 versus $7.76 billion. So beat for the Q1, and they also raised their fiscal year adjusted EPS guidance by 8 cents on the low end, from $8.65 to $8.73. So a beat and a raise this morning for ABBV.
I mean, this is coming. It does a lot of good fundamental stuff. It's also a victim of pharma and biotechs being out of favor. And this is a 5.32% dividend. I still have it in my long-term portfolio. And I'm going to talk against my long-term portfolio right now and saying, you know what, this pop probably gets faded just because the entire sector is still out of favor. So biotech, drug stocks, we saw the significant decline in Merck. It's been trying to rally back here. But if you look at the ABBV or you look at the XBI, they're just kind of hanging on. They got hit hard last week, bounced a little bit here the last few days, but path least resistance probably lower here. So I always like to sell. And if you look at AbbVie over the course of the last year, it's clearly in a downtrend. I always like to sell pops and downtrends. It's a good candidate for that. I'm still sticking with it in my long-term portfolio only because I've had it since birth, since it got spun off from Abbott, and my cost basis is so low that I don't feel like, bringing in and bringing on a big capital gains. I have sold half of the position, but I don't know. I don't think I'd be adding to it here, even though it's got a nice dividend. I like the fundamentals of the company.
Double top of pre-market trading, 81.50. So we'll be keeping an eye on that. If in fact it could rally another $1.10. Coming back down on the dailies, I don't have any confirmation of that high. I do have a pair of highs. Let's just call it 81.40. So even if you do get to that pre-market high, you could see some still more sellers at that area. Coming back on the downside, up $1.88. In order to fill the gap from yesterday's range, you need to get under $80 here, $79.59. That could definitely be a support area. You had two highs there from Tuesday and Wednesday. And then, of course, after being up like this, you do not want to see it go red on the session. The close from yesterday, 78.67.
All right, I'll just run down my list here. UPS down $5 this morning. Q1 adjusted EPS for UPS, $1.39 versus $1.42 estimate. Sales of 17.16 versus $17.77 billion. So an EPS and a sales miss in the first quarter. They did reaffirm their prior fiscal year EPS guidance, but a miss in Q1 nonetheless.
Trading down $4, $3.50. So getting hit here. So this is more a rotation here happening. The wall of resistance at 115. Yeah. I don't know if there was something in the book there or not, but holy cow, look at that level. I mean, it bumped its head up there 1, 2, 3, 4, 5, 6, 7, 8, like 9, 10 times, even including yesterday, and can't get through 115. So there's obviously somebody selling it there. These formations just don't happen for, psychological reasons. There's obviously a big institution hiding there at the printer, dumping, right before it. So now it's selling off. So it's failed there at this significant resistance level of 115, and that remains major resistance. So fundamentally, UPS, I own FedEx, so I guess that's the one I own. There's no sense me owning two of these things. I'm probably sticking with the FedEx. I bought that, that was in one stock that I bought on December 26th, and I wish I would have bought every stock on December 26th. So obviously, I bought very near the lows. I think I paid 156 for it. So, and it's 197 now. So I wish I would have bought more stocks, but I'm sticking with FedEx. I don't know if I'm interested in UPS.
UPS pre-market low 110.10. Nice bounce here. The resistance since hitting that 110.10 has been 111.50. So I don't know if I want to be short this thing above 111.50. Get to yesterday's range. That should be good resistance at the bottom of the range. 113.45. Not so sure about this 110.10 low holding up here, because on the daily chart you kind of just blew through like the 106 to 112 area. So there's a lot of air in here. If I was looking for a level below the pre-market low, 109.02 was your March 27th low.
Someone just threw out Hershey in the chat. This one we don't talk about too often, but they had earnings this morning. HSY, so we'll do them right now. Q1 adjusted EPS $1.59 for nice chart.
What a food stock
versus $1.46.
All-time highs.
Sales of $2.017 versus $1.99 billion. So they beat on both the Q1 numbers. They gave some fiscal year adjusted EPS guidance that was mostly higher than estimates. The estimate was at the low end of the range that they gave, and new highs here.
New all-time highs.
Yeah,
incredible.
Wow.
If you think about the disaster that like Kraft Heinz has been, and you think about the disaster that a lot of food stocks have been. I mean, a lot of them have not performed very well. Here's one that went the exact opposite direction. HSY making new all-time highs here this morning. So it's impressive. That being said, I don't know. These things are hard, though. I mean, we didn't want to chase the KMB, and it was the play. So this is a conservative stock. So we're going to see some rotation here today. So who knows? I mean, I don't think I'm coming in here shorting it. I hate shorting stocks making new all-time highs. So I'm not shorting it. But I don't know if I'm chasing it either. I'm probably just sitting on my hands.
Well, Dennis, maybe if you didn't chase that KMB on that day, you would have been rewarded that day. But if you seen what it done, it's
come back off now.
Yeah, and if you're,
so it filled the gap too, so it did come back.
It did come.
So something to think about. I mean, if this does get a big gap up, I don't know. But this stock, this KMB was all-time highs too, right? Or not quite. Can be all-time high?
No.
It wasn't.
Quite a bit
Big
off.
difference.
Big
difference when stocks are gapping at all-time highs and gapping into older resistance. Big difference.
Yep. Hershey, the Great American Chocolate Bar. Let's see here. It's up on 7,400 shares. Not a lot here. Anything in the book here, Dennis?
Well, you know what? I haven't opened the book. I was just doing it because I can anticipate you giving me that question, but it's going to take me a minute to open my book.
I would say I'm going out on a line here.
I bet you there's something.
129. I think if you got to sell off at 129, I think you're okay today.
You got to buy and balance 25,000 shares though, which is somewhat significant too. So, and that's probably going to grow.
I couldn't buy Hershey's up 40 cents, let alone up $4.
No, I know. I don't pay them.
Yeah. So,
although it would have worked on the KMB.
Yes.
Until 3 days later. So I got to sell fast.
That's all I care about. Spoons.
Market's tricky market.
Yeah, boy. Spoons are leaking. Man, this is going to be a real interesting.
They don't want to rally. There's too many other stocks that are in the red. And a lot of those stocks I talked about, like these defensive stocks, there's going to be some major rotation here today. So don't think that all stocks are going to trade higher because of Facebook and Microsoft. There's going to be a lot of tech stocks trading lower as well. Not just other stocks, but tech stocks as well. And 3M is going to put, a hit on some of the other stocks here too. So there's going to be some major rotation here today. Also, we haven't even talked about the home builders are going to be weak here today. DHI actually had a good report, but it was just priced in for perfection and it wasn't good enough. And it's trading in the red. And if you look, you're seeing a lot of the home builder stocks, the sympathy plays all look like they're going to trade down here too. A lot of them haven't traded this morning, but almost all of them are offered. And not only that, we're seeing offers start to form in Home Depot and Lowe's as well. So watch that sector too for some relative weakness.
All right. Just one last one here because it applies to what Dennis talked about at the top of the show. Give us a Comcast report, and then we'll talk about the price action. Oh, it has come back, though. Whew.
76 cents versus 67 cents on the EPS. Sales 26.8 versus 27.2. billion. So an EPS beat, sales miss for Comcast.
But a nice EPS beat though, and
It came
you did
roaring
see
back.
this thing have an initial rally. I think the pressure, it's come back and it's trading. Oh, it's actually trading in the green here now too. I don't know. Like this is a component of the QQQ, which could put some pressure on it too. But there's enough stuff down in the QQQ right now that maybe there is room for this to go up. Just looking at the arrow behind it. I mean, the earnings are always going to lead. So if they want to buy something on a good earnings report, they're going to buy it no matter what. ABBV, DA. Regardless of the arbitrage.
Okay.
So I didn't want to swear on the show there. So Comcast trading up $1. I mean, it's going to do what it wants, and right now it wants to go higher.
43. We just stuck over $43 here. Pre-market high 43.11. Your high back up 44 is open to 44. That's your January 2018 high, and that could be an all-time high. No, that's not. Yep, that's the all-time high. So be a big leap, but if you're looking for the all-time high, 44 even at Comcast, wrapping things up, SPOO's up $1.75, 29.32.50. Keen on the pre-market levels here, 35.75, the high double top at 39.75. Coming back on the downside, yesterday's low 28.50, our current low 27 even, 29.27. So no downside until we breach that level. Spencer, you want to wrap things up and cover the final show?
Yeah, not really worth going over ratings today since the vast majority are going to be reactions to the earnings report. So let's wait a few days for the dust to settle before we maybe we'll see what the ratings have in store for us tomorrow. But that'll be it for today's show. If you missed any part of it, catch our podcast on iTunes, SoundCloud, Stitcher, TuneIn, and Google Play. Thanks to our guest today, Anne-Marie Baiynd. Thanks to all of you in our chats. As I've been mentioning for the past couple of days or so, you can watch Pre-Market Prep live, hang out with us, and see Joel and Dennis present some trading strategies at the Benzinga Trading Summit, June 20th in New York City. Go to benzingatradingsummit.com to learn more there. Enter the promo code PMP15 to get 15% off your ticket. That'll be it for us today. Everyone have a good rest of your day. We will see you on Friday.